Hello and welcome back. My name is Jalen West. I'm the Senior Marketing Manager here at PPR Capital Management. This time, we're excited to take a step back and look at all the key developments that took place in Q2 across our national multifamily portfolio. Today, I'm joined by our Chief Asset Officer, Craig Johnson, who is responsible for implementing the investment strategy here at PPR and monitoring all of our ongoing assets. Thanks for joining me today, Craig.
Thank you.
So I want to start out looking at the big picture. Can you take a moment to summarize all that took place in Q2 across the national multifamily market?
Yeah, absolutely. So I'd say, one thing that Q2, along with the last couple of quarters, has made clear is that there really isn't a national multifamily market right now. There's just a few different regional multifamily markets because if you look at the performance, supply, demand, occupancy, rent growth in the Southeast, Southwest, Sunbelt markets versus, say, your Northeast or your Midwest, you're looking at what look like 2, 3 totally different countries. So a lot of opportunities out there, but definitely a big supply surge getting absorbed by the Sun Belt right now. But on the bright side, Q2 was one of the strongest absorption quarters we've seen in quite some time, over 10 years.
Interesting. And then in Q2, we saw, record-setting absorption rate in Q2, and new construction hitting a 10-year low, it looks like. How does this imbalance impact, our investors and overall multifamily market?
Yeah, absolutely. I mean, I think it's a case where there's a lot of opportunities out there for data-driven investors like PPR because, people are looking at the supply surge that's coming in, sure, noticing the absorption rate, but, especially in that Sunbelt market, rent growth's either flat or negative in a few different markets. And so builders are getting a little bit scared. But, it's kind of like 3 years ago, but in reverse. 3 years ago, rent growth was fantastic, supply was very limited, and everyone started building. And that's what resulted in the supply surge that's happening today. But now everyone looks at that, gets scared. Starts are now at a decades-long low, as you just mentioned. So a great opportunity, especially for new construction or ground up, or value-add investments like we do here at PPR, where if you're looking to exit in 3 or 4 years, by that time, there will be no new supply hitting the market relatively because there's no construction starting today. So, obviously a challenging market for existing buildings in some cases if you haven't kind of calibrated your approach correctly, but definitely a lot of long-term opportunity.
And it sounds like it's really about maintaining that data-driven approach while kind of watching the market. Obviously, there's no right time to buy multifamily, but there's a time where you can mitigate your downside risk, but still, leave a lot of upside on the table.
Absolutely.
All right, now on the portfolio side for PPR, this quarter we bought a deal in Milwaukee.
Yep.
You talk about like what we like about that market and how that deal fits in the overall thesis of the Reliant Income Fund.
Yeah, absolutely. So Milwaukee's a great market. You got 8 Fortune 500 companies there, plus a lot of investments incoming from Amazon and Microsoft in the I-94 corridor. I think it's part of that Midwest that I mentioned a little bit earlier, where rent growth has been very solid. Milwaukee vacancy rates have been down below 5%. There hasn't been a ton of supply into that market. So as far as Milwaukee, we love it, and we've been looking to acquire a deal there for a couple months and actually years now. As far as villas at Foxwood itself, we love that property. And, we've been talking a lot recently at PPR about build to rent, rolling that out, did our first acquisition here in 2025. But it's important to recognize that what build to rent, really is appealing to a different demographic and a different style of living, right? It's not traditional podium or garden style apartments. It's your own miniature house, right? Normally with your own garage, your own yard. And it really appeals to either that kind of up and coming, maybe 30, 35-year-old demographic looking to move out of an apartment, or a retiree or a divorcee looking to downsize a little bit from owning their own home. And so in markets like Milwaukee, where the suburbs are pretty infilled, there's not a lot of room for ground up construction of build to rent product. If you were going to do that, you would just build homes for sale. But the property at Villas at Foxwood is essentially what build to rent would be if it was built back in the 90s. So townhome style, every home has an individual private garage, private entrance from the street, private yards, and they're all 2, 3 bedroom units. So it's perfect for kind of a growing family or that older, retired demographic. And so, between that and, what I mentioned, which is just the lack of building opportunity up there north of the city, we think we're pretty secure from competition directly against ourselves. So primed for a great rehab value add opportunity that should have good occupancy and rent growth going forward. forward and be a great addition to Reliant Income Fund.
Yeah, with the push towards build to rent, it sounds like the overall macro trends are pushing individuals to that. They want that more home-like lifestyle versus that box style apartment you see going up in most downtown centers.
Yeah, absolutely. It's something we're hoping to take advantage of.
Great. And in this quarter, we also rolled out a program called Symmetry. We briefly touched on this in the last quarterly update. But can you talk about what Symmetry is and how it helps us with reporting and monitoring the assets in the portfolio?
Yeah, absolutely. So we're really excited to bring that on board. Symmetry is a solution to something we've been looking at for a couple of years now, which is finding the right software with a balance between property management and asset management. So traditionally, our property managers are looking at very, very granular details like work orders or upcoming lease turnovers, things like that. That's not the kind of data that we at PPR need reported to us on a daily or weekly basis necessarily, because we're more overseeing our sponsors and our JV partners who are handling affairs on the ground. But at the same time, we do want access to up-to-date, daily information about the property if we need to go get it, because there could always be a situation where we need to take action or just be a little bit more in depth with our surveillance to preserve our investors' capital and make sure everyone's making the right decisions. And so Symmetry is exactly that, right? It's AI enabled, and it's a reporting platform that lets us drill all the way down from high-level property financials coming straight from the property manager's databases. So starting at that very high level of just revenue, costs, net operating income, things like that. But if we wanted to, with a couple of clicks of the button, you can drill all the way down to individual units, individual tenants, work orders, and see exactly what's going on the property level. So it's a great leap forward for our surveillance here at PPR, and kind of just part of the process of professionalizing and leveling up the company as we move forward here in 2025.
Now, it sounds like the program overall, which allows us to manage our properties better, even on a granular level. Being able to allowing us to catch problems before they compound into much bigger problems, subsequently, benefiting our investors.
Absolutely.
Yeah, great. And then looking at the second half of the year, obviously we're a pretty busy team here at PPR. We have a lot in the works. But can you talk about some of the key operational projects we have going on, and maybe some of the leasing and what's going on with the assets in the second half?
Yeah, I mean, I can say we're obviously focused on the blocking and tackling of lease up, occupancy, making sure rehabs get done on time and on budget and all that kind of thing. But I will say one big focus for the second half of this year is not just buying properties or building properties, but building communities. It sounds very basic, but a lot of people over the past 3 years have kind of lost sight of the fact that that's what an apartment or a multifamily property is supposed to be, as a community. So ensuring alignment between the tenant base, kind of your staffing, and the amenities at the property is very important and gets missed a lot in today's industry. So just to give you an example, if you're at a build to rent property like the one we have down in Knoxville, a really important distinction is if you think your tenant base is going to be driven by that younger 30-35 demographic, maybe you're looking for more activities, maybe grilling stations, dog parks, things like that, aimed at that millennial kind of up and coming young family demographic. Whereas let's say you thought there'd be more 65, 70-year-old retirees at the property, maybe you're looking at a pickleball court, things like that. And it's same thing for the staffing, leasing consultants, from top to bottom, making sure that the kind of tenant base and kind of the environment local to the property is matching up with the staff that you have on hand, the amenities you have at the property, and just the experience that everyone gets when they live there. And so, building that kind of community is great, not only for the tenants, obviously, but also for our investors, and here at PPR, because that leads to increased retention at the property. People want to stay there. They enjoy living there. They think of it as their home, not just somewhere they're temporarily living, and also allows us to therefore increase rents and drive better returns for the fund and our investors.
And it sounds like the theme of building communities also fits in the core values of the firm. It's really about the people that live in the communities, not just about deploying dollars.
Yeah, deliver value for all the stakeholders, in addition to our investors.
Exactly. Well, thank you, Craig. I appreciate this. And investors, if you're interested in learning more, feel free to reach out to our investor relations team or subscribe to our bi-weekly newsletter.